euro versus the US dollar, to me, I've just had this feeling that we're going lower, that we're going back to parity. But, what I try and do is I try and see how a market responds within a pattern. So we have this diamond pattern, which is a neutral pattern. Prices could go higher out of here or, hit this top end and go lower. So you can see that we broke out underneath this diamond pattern a few weeks ago. And now we're just effectively retesting the breakout. So again, I really like to see these structures, and we're really at, an inflection point where either if this thing starts going through here, we'll have a clear trade to the upside. And conversely, if we start failing right at this resistance, we should go lower. And right now it looks like a bit of a bear trap, meaning that, again, prices snuck under this support line. People got short and expecting of a follow through, and this is where you could get a trap and a move to the other side. And so again, you could easily play this by putting a buy stop above the weekly high with a pretty tight stop. I would just position a stop loss kind of under wherever we close today, maybe 75, 80 points underneath the close of the week. And so there's a number of different ways you can play this scenario. So this is just an upside down version of the dollar index. So if we think this is a bull trap and it's going to fail this way, the euro is going to go in the opposite direction. So any questions on currencies or the dollar or the pound New Zealand before I go forward? So it looks like the bonds are reacting very nicely. Richard Mass says core PCE 0.3% as expected. Okay. It's not what the number is, it's how the markets respond to the numbers, in my mind. Any questions before I kind of move on to the next asset class? So